Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets for the week ending Friday, October 24th, 2025. Kicking things off, I'm Max Profit. Major indexes surged to new highs this week. The S&P 500 index and the Dow 30 index both reached record closes. The Nasdaq composite followed suit with its own all-time high, while the Russell 2000 demonstrated strong upward momentum. Market breadth remained positive. The S&P 500 showed 273 advancing stocks versus 223 declining. The Dow displayed particular strength with 21 advancers against 9 decliners. The Nasdaq had slightly more decliners than advancers, despite its price gains. Looking at weekly returns, the Russell 2000 led with a 2.5% gain, followed by the Nasdaq Composite and the S&P 400 Midcap, both up 2.3%. Year-to-date, the Nasdaq has outperformed with a 20% return. In long-term performance, the Nasdaq Composite leads with a 16.5% average annual return over the past decade. The S&P 500 follows with 12.6%, while the Dow has delivered 10.3% annually.
Checking out best and worst performing equities, I'm Penny Stock. Beyond Meat surged over 239% with a sharp upward move, despite an overall negative trend. Scienture jumped 193%, hitting new lows but showing mixed positive momentum with strong volatility. Looking at weekly returns, Beyond Meat posted remarkable daily gains, averaging 45.9%. Scienture followed with 64.5% average daily returns, while Logistics Health showed 34% daily gains despite hitting new lows. In longer-term performance, despite recent gains, most stocks show negative annual returns. Genenta Science stands out with positive one-year returns of 15.9% and three-year returns averaging 8.3% annually. Among large caps, Intuitive Surgical led gains, rising 22.5%. General Motors followed with a 19.3% jump to new all-time highs. Halliburton gained 19.2% amid strong upward volatility. Weekly performance shows Intuitive Surgical averaging 4.3% daily gains. General Motors maintained strong momentum with 3.8% average daily returns, while Warner Bros. Discovery achieved 3.1% daily gains. Long-term returns showcase Intuitive Surgical's impressive 10-year annual rate of 25.7%. General Motors posted solid 3-year returns of 24.9% annually, while Las Vegas Sands showed steady growth. Among declining stocks, MingZhu Logistics plunged 84.8% to new all-time lows. Adaptimmune Therapeutics dropped 67.6%, while Euphoria Therapeutics fell 59.7% in its third straight week of losses. Weekly performance reflects severe declines, with MingZhu Logistics averaging minus 23.2% daily returns. United Homes showed minus 13.1% daily returns amid strong downward volatility, while Elector declined minus 10.1% daily. Leading the worst performers, MingZhu Logistics plunged nearly 85%, recording a new all-time low at 14 cents. Adaptimmune Therapeutics dropped 68% to 6 cents, while Euphoria Therapeutics fell 60% to 6.24. United Homes and Elector both showed strong downward momentum, declining 59% and 51% respectively. Among large caps, Molina Healthcare led declines, dropping 15.2% to 163.32, with strong downward volatility. Deckers Outdoor hit a new 52-week low, falling 12.9% to 86.94. Netflix declined 8.7%, while Newmont and Williams companies each fell around 8%. Looking at recent performance metrics, Molina Healthcare shows significant weakness with a minus 2.95% average daily return this week. Decker's Outdoor has declined nearly 57% year-to-date. Despite recent drops, Newmont maintains a positive year-to-date return of 124%. On longer timeframes, Molina Healthcare shows a 50% decline over the past year. Netflix maintains strong long-term performance with a 27% 10-year annual return rate. Decker's Outdoor shows impressive 10-year gains of 25% annually, despite recent weakness.
And now on to U.S. sector performance, where technology led gains with a 2.7% rise to 5,787.71, hitting a new all-time high. Energy and industrials followed with gains of 2.3% and 2% respectively. Consumer cyclicals and healthcare both advanced 1.9%. Market breadth shows mixed signals across sectors. Healthcare showed strong daily advances with 622 stocks, up versus 390 down. Industrials maintained positive breadth across all timeframes. Despite price gains, consumer cyclicals saw more decliners than advancers. Year-to-date returns show technology leading with a 25.6% gain. Industrials follows with 17.5%. Healthcare and consumer cyclicals have more modest gains of 6% and 4.3% respectively, while energy shows a 3% advance. Looking at long-term performance, technology dominates with a 10-year ARR of 22.9%. Consumer cyclicals and industrials both delivered around 11% annually over the same period. Healthcare and energy showed more modest long-term returns.
Technology leaders showed remarkable strength this week. EPAM Systems led gains, rising 10.2%. IBM hit a new all-time high at 307.46, while CrowdStrike, Advanced Micro Devices, and Micron Technology all recorded new peaks with strong upward trends. Short-term returns are impressive across these tech leaders. Advanced Micro Devices shows exceptional month-to-date performance, up 56%. Micron Technology follows with a 31% monthly gain. Year-to-date, Micron leads with a 160% return. Long-term performance highlights Advanced Micro Devices' remarkable 10-year ARR of 61%. CrowdStrike shows strong 3-year performance with a 49% ARR. Meanwhile, EPAM Systems faces challenges with negative returns across shorter timeframes.
Among underperforming sectors, consumer defensive fell 5.23 points, showing a mixed negative trend and breaking downward after trading flat. Communication services and real estate both displayed strength, rising 1% and 1.4% respectively, with strong upward trends. Market breadth reveals mixed signals. Consumer defensive shows more decliners than advancers across all timeframes. Despite price gains, communication services had 153 declining stocks versus 58 advancing in the latest session. Short-term returns show real estate leading weekly performance with a 1.4% gain. Utilities has maintained steady growth with positive returns across all measured timeframes, while consumer defensive struggles with negative weekly returns. Long-term performance highlights communication services with impressive 10-year returns of 187%. Real estate and consumer defensive show more modest decade-long gains of 41% and 69% respectively.
Consumer defensive stocks faced pressure this week. Clorox hit a new 1-year low, down 3.2%, marking its 4th consecutive weekly decline. Hershey led the declines, dropping 4.4%, while Molson Coors Beverage fell 3.9% amid a very strong negative trend. Year-to-date performance shows mixed results. Dollar General stands out with a 34.5% gain, while Clorox and Molson Coors have declined significantly, down 28.7% and 20.7% respectively. Looking at longer-term performance, Hershey and Cisco show similar 10-year gains around 85%. Molson Coors has struggled over the decade, down 48.6%, while Clorox has declined 6% over the same period.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, cryptocurrency, and commodities. Thanks for watching.